What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is July 26th of 2021. Well, folks, I hope you are having a fantastic day wherever you are, and in today's video, we got to spend some time to talk about the exuberant price action we've seen not only over the last couple of hours that has led Bitcoin charging closer to that big even level of 40K, but outside of that as well, talk about the optimism and price action over the last 6 days. This has been the best winning streak of bullish price action for Bitcoin and cryptocurrency assets as a whole, as far back, not only during the correction, but outside of that as well, as far back here as January of 2021. So the important question remains here, is this a confirmation that we've simply gone through a mid-cycle correction? And do we have the room not only to revisit previous all-time highs, but also break towards that 6-digit key territory above 100K? I want to go ahead and spend some time to talk about that today, guys. And I'll be honest, there's no final answer. We don't really, and I don't think we ever can really know where things are going to go. We can only stick a bit to our conventions, and outside of that as well, not only our convictions, but also focus on what we have to work with. So let's go ahead and focus here on one important key aspect before we dive into the data and the metrics. I just put out a tweet here, and I think it summarizes something that's very important to understand. And it really has to do with who you choose to follow in the crypto space, whether it's me or anyone else out there in the space. I'm not perfect by any means, but I think that this tweet here embodies something very critical that will lead you to either winning or losing in markets, either being ahead of the game or falling 2 steps behind, right? It's okay to be 1 step behind or be ahead of the curve and know exactly what to do in the market. But it's likely going to be that if you're disciplined, you can land in one of those 2 categories rather than being caught 2 steps behind. I tweeted out, whether people like to admit it or not, a lot of the same people calling for Bitcoin to go straight up to 100K or 200K back in May, they said it was just a couple days or weeks or months ahead, the super cycle was in, are the exact same people who are fudding and showing immense concern and bearishness when price action looks like it might have a chance of tailoring back towards 2025K. After it's already gone down more than 55%, they feel like that's the time to start shorting the market, to start taking bearish positions at a support range that had been retested multiple times and always saw heavy buy-side activity. The most important thing you have to do as an investor is not only go out and learn from others who have been there, but to make sure that you're learning from the right people, guys. Because for the last 2 months, we stuck to our convictions on something that, again, seemed crazy at the time. Back more than 2 months ago, we put out a video where I just shared my thoughts on the crypto markets. I was on the beautiful beaches of Costa Rica. I had to spend 2 weeks there before I could return back to the US as we were traveling from Europe. And at that time, that was when, at that period of time, it was the worst peak sell-off price action. We were down more than 55%. And as crazy as it seemed, I was taking out for the first time, as negative as I speak about leverage or taking out credit to increase exposure to crypto assets, I was comfortable for the first time taking out a loan through Celsius, through a provider where I can borrow and put my crypto collateral locked up. I actually bought more crypto. That's the first time I've ever done that. And the reason I did that was because I was so convicted on the idea that with any kind of downturn like this, during a cycle, I had sheer confidence back then that the wave of time from bottom to top here, if this really was the top at 65K, that I knew for certain that this couldn't be the absolute market peak, right? It just didn't make sense. Sure, there was a lot of retail FOMO, but the metrics and the data science and price history didn't showcase any signs of confidence for that. So my risk tolerance led me in a position where I built those positions. And lo and behold, it's practically where we bottomed out in this market. It was around this range, not far off from where we set in the lows here just a couple of days ago, back in late July. And now you can see here that we've had multiple days of green price action. The volume is returning here. If you look at the overall volume profile, we're looking at Bitstamp, so you don't get a full picture here. But if you're looking at Binance, you're looking at all these different exchanges, things are looking really good for Bitcoin. And at the peak period of time where there's FUD, we stood our ground and stood to our convictions that this was going to be a mid-cycle correction. And the reason why is because every single day here on the channel, we de-steered the FUD. We de-steered the FUD that was spread around for 2 weeks in this case or more, that once Grayscale has some of its GBT shares, in this case, unlocked, basically the Grayscale Bitcoin trust flows, that they were just going to dump it on the market, even though they had already started distributing or selling off some of the underlying Bitcoin, as there was a negative premium or discount on the actual GBTC shares. They're not planning to just dump it on the market. They've bought all this Bitcoin. It doesn't make sense for them to automatically sell it on the market or cause massive fear against the underlying asset that defines their financial products. Along with that as well, we looked at the on-chain metrics when it came to those holding more than 1,000 or more Bitcoin. And we could see that since as far back here as May 17th, during the peak fear here, when we had the last tail end of the real sell-off, we can see here that the whales weren't selling at all. In fact, since back here in early July, we had been increasing those numbers slowly but steadily. A couple thousand more Bitcoin accumulated by larger investors. The 10K wallet addresses were 10,000 Bitcoin or more resting. No mass exodus, much of which happened back here during the accumulation or the rally in the market, right? Let's go ahead and take a look at the data science models. I know people have mixed feelings about the stock to flow. Its popularity, though, is undeniable. And when a lot of investors are watching the stock to flow, they look for the discounted deviations or model variance, where, in this case, price is below where the stock to flow says it should be. And what do you know? Right here, when we're at -1, which we've only revisited here in July of 2017, right? And all the way back here in November 2011, at the bottom of each of these markets, well, actually in this case, the bottom of the market back here in the mid-cycle correction point of 2017, people then start to get fearful, when in reality, this is the point to get absolutely exuberant about price. It's the point where you build those positions because you're at peak fear, your peak discount point, according to the data science models. Our HODL ratio, another one we looked at a while back. Again, the similarities here to 2013 that had a significant mid-cycle correction before carrying forward is absolutely similar in so many ways. A peak at around the 16,000 point range like we had over here, right? Very similar range, came down here, discounted down towards around 5,000, and setting up here the foundation to potentially move higher and actually get into the red zone like we've seen in every single cycle. The MVRV Z-score, same exact thing. Midpoint rally here, around 2 points. Pullback, rally up higher, and we came down here towards around the 1 point range, just like we did back here, setting up for a secondary exuberant rally in the market. And if you guys are interested in the derivatives market, this is the biggest single day of short liquidations since back during the active trading hours of May 18th when the sell-off was happening. This is really the time when there's so many shorts in the market compared to longs, and they're getting liquidated one by one. Does it mean that this is a time to get bearish or bullish? For me, when I see shorts getting liquidated, people who are overexposed, over-leveraged, overly following their emotions and the trend in the market within the given period of time. When they're ignoring the time-tested models that have been out there, the on-chain metrics that do not lie, they show you in this case that whales are not selling off. Is this really a time to get fearful or a time to get optimistic about the market? And it's not just Bitcoin here, guys. To be completely blunt, it's the overall crypto market. We not only found support back here in late June, at the midpoint here. This is the first wave here, the second wave. We come down here and we find support on that peak of the first wave here before we start off the second one. And then we repeat it even faster in many cases and break past it and start a next wave here, right here for price. But again, you can see here that just over the past 6 days, we're looking at the 3-day chart here. The past 6 days with the price action, we've added over $350 billion in market cap for cryptocurrencies. The biggest gain in market cap here that we've seen in a long period of time. And not one of these kind of flash rallies back upwards after declines. A real substantiated buying range here at support where prices are actually able to move higher. And altcoin dominance, albeit it has ticked down a little bit here with the strength of Bitcoin. Altcoins are up in USD value, and not to mention, in the broad scheme of things, they're still holding up really, really well. We still haven't seen a trend of lower highs and lower lows, the dual combination we need to see for the trend reversal. And that signifies that this is likely simply a mid-cycle correction. I'm not always perfect, guys, when it comes to crypto markets, but the one thing that I'll say that I stand by and that I've grown over time is my convictions of focusing on simplifying crypto trading. I'm not just a pure crypto investor. I'm not in love with crypto. Okay, well, I absolutely do love crypto, but I'm not married to my holdings in this case. I don't just shill coins to you guys just because, oh, I have investments in them, and oh, don't invest in stocks and this and that because I'm in love with crypto and I just can't let go of it. Crypto to me is such an amazing asset class. It's one of those few opportunities we have in our lifetimes for Gen Z, millennials, and even baby boomers and boomers in this case who are interested in the market. And the reason why is because if we're thinking about markets of scale, crypto is at a $1.5 trillion market cap as a whole. You want to talk about global equities, you're talking about over $100 to $120 trillion in value. Talking about global real estate, well over coming probably closer towards 300 trillion with all the money printing that's been going on. You talk about commodity markets like gold and silver, precious metals, easily over $13 trillion. Crypto is a small nugget. That is the exponential market that you can invest in and very confidently and conservatively expect that it has much more of a likelihood to double, triple, or 10x over the next couple of years than gold, silver, equities, you name it. And my philosophy going back to this realization is to focus on buying the bottoms of the cycle, the least optimal time in most people's eye, when in reality it is the most optimal time, and holding convictions, holding through these brutal corrections throughout the cycle, especially in this market that's driven by credit and derivatives and leverage that can distort market valuations and have exuberated rallies and also exuberant sell-offs. To hold through towards the general exponential euphoric range where within a week or two, we're able to sell into the peak of the cycle. It's not always about timing the top. It's not always about getting the absolute bottom. But that is the max amount of percentage gain that you can make without losing your head trying to trade the market. And historically speaking, it is the best strategy if you are going to attempt to trade crypto markets, is to have long-term time preferences, to average in on discounts, and to simply ride the wave. That's it. No need to make it more complicated. And the really cool thing is that here on the channel, we try to go through and dive not only into why Bitcoin is a great asset to invest in, but also how there are many other investments in the crypto space that will outpace Bitcoin throughout this cycle. And that's why we've held our conviction here on altcoins, even during this brutal sell-off. Yeah, some plays that I own and many others hold in the space went down 30, 40, 50, 60%, right? It happens. You got to be able to stomach that because you have to realize that a lot of those gains really were only around for a short period of time. Remember how ETH went from 2K to 4K within a matter of just a couple of days? I mean, we can pull up the chart here, guys. I'll pull up the Coinbase chart here. Right? You can see here that Ethereum really didn't live in this price range for very long. Put it on the weekly chart and it really showcases that for just about 2 weeks, maybe possibly up to 3 weeks here, right? We really had this significant rally here. And we're right back to where we were on April 12th. This is the reason I don't panic, guys. For me, the short-term valuation gains are just a sign of things to come. It proves to me that buyers are willing to pay that price. And no matter how quick the correction comes and how long we stay in that accumulation range, down 30, 40, 50%, I'm knowing that, hey, is price holding there? It's very likely then the buyers are going to come back in and pay the same price here, if not higher, as the market continues to grow in the sense of adoption and overall amounts of users that have yet to touch crypto get a hold of the market. It's an emerging asset class, and it's incredibly small in the grand scheme of things. So, well, guys, if I haven't rambled enough already today and you guys really enjoyed this video, again, you guys can always stick around. There will be more content come later on this week. If you like this video, please consider dropping a like. And to the ultimate kind of question here, I know I rambled on a lot, as we talked about earlier, am I confident that this is a sign of the times to come? Yeah, I think it is. I don't think we're going to vertically ascend up here in the market overnight. Again, I don't want to be what I just spoke about in this case on Twitter. This 100, 200K, it's going to be here any day. I do believe we can reach that price range, but I think it's going to be well into 2022, well into next year. Because to go from the price range we're at here around 38K to those kind of price ranges, that's massive valuation gain. So anyways, if you guys want to follow me as well, you can always check me out at Nicholas_Merton. You can also subscribe to the Dash Report if you like this kind of rambling analysis where I go over so many different things and I try to view things on those longer term time preferences. But that being said, guys, you can probably tell I've rambled on enough today. I'll go ahead and leave you all with that. And again, if you guys like this video, please consider sharing it with a family or friend member, giving it a like, and subscribing if you haven't already, as well as hitting the bell icon. All right, guys, that's going to be it for today's video. Thank you all so much for tuning in, and I'll see you all in the next one. Take care, everyone.